Hello, everyone. I hope all of you are doing well. So the other day, I've uploaded a video about a quicker way of selecting your stocks, and I've taken that same watch list I have here on the right side, and everything about the Nifty. There's about 10 or 11 stocks right there. These are the stocks that I have outlined as stocks that I want to trade, that I could be trading. All right. Not, that means they're trending on the daily, the weekly, and the monthly charts. Trending in the sense that the 20 period moving average is above the 60 period moving average, and the 60 period moving average is above the 200 period moving average. Also, we want to note that the highs of each day or each candle are higher and higher and higher, and the lows are higher and higher and higher. These are things that we define to be trending stocks. So we've identified about 10, 11 of those stocks already. So today I want to talk about how to enter these trades, where to find the best entry. And this is not an easy task, but let me, this will take some practice for you to fine tune your entries, and so here are some things that I want to point out to you. So first, I'm using a 5-minute chart. Okay, I have used the daily, the weekly, and the monthly to identify and make a list of stocks that I've done already. Now I'm using the 5-minute on a day-to-day basis. The other one I do once a week, maybe on a Saturday or something. But then this I do on a day-to-day basis. I trade about 3 or 4 stocks, but I use the 5-minute chart, and I use the 20 and the 200 moving average. The 20 period moving average and the 200 period moving average. That's what I use. All right. And here are some concepts that I want to share with you. One thing you will notice as we look to the history of these stocks is that the 20 period moving average gets close to the 200 and it goes away further from the 200, but then it comes back closer to the 200. Okay. And then it repeats that again to see the 20. Now, this time it's below, but it goes below, but it goes further and further away from the 200. Look at that. But then it doesn't stay away. It comes back closer to the 200. All right. And sometimes it comes very close and touches and crosses the 200, goes in the opposite direction. Here it is. See, it's going in the opposite direction. It's going higher, but then it's going away from the 200, farther and farther away. And then once it gets to, we don't know, there's no way to identify how much further, but it goes further, and then it begins to come back again, closer to the 200, and then pushes out back again. See? So this is kind of an oscillating thing that you will see. And whenever the stocks get close to the 200, you know that they're going to be going farther away from the 200. Whenever they go farther from the 200, you know that they will ultimately or eventually come back closer to the 200, sometimes in the same day, sometimes within a few days. But they definitely, and in the 5-minute chart, you're looking at the same day pretty much. All right. So that's one thing. All right. I'm looking at the 5-minute chart, and I need the 20 period moving average and the 200 period moving average. All right. And so here's what I'm looking for. And then another item that I often use is the RSI. Okay, that's the relative strength index. So you want the RSI, and I'm using the 14 measurements, 14 period. You can use the default one, relative strength index. You can just select that from your indicators list here. All right, you can put in RSI, and you'll see relative strength index. Just select that, relative strength index, RSI. That's all you need. Okay, you select that, and this will show up. So what we will notice is that once the relative strength index, the RSI, once it gets close to the top, see, here's the the upper levels, okay? Once it goes to 70, 80, 90, like that, that's the top upper level. Once it gets up there, the chances of it continuing to go up is quite less, and you're going to see it going down, all right? And then once it goes down to the 20 or so, once it goes below, and the chance of it going further down is even less. All right, so this is also kind of an oscillator, goes up and down, all right? And you can observe how this works out. Okay, so if this looks good here on the top with the candles, if it looks good, but the RSI is too high, then I won't trade it. I'll wait for the RSI to be about halfway or even low enough where there's space for it to move up, okay? Now, I want you to look at this right here. So very often, what I do is I look for the 20-period moving average to be above the 200-period moving average. And I would like for the stock to be above the 20, but here the stock is below the 20, okay? But that's what I would like for it to be. And this is fairly a good place where I look for the RSI. And this is some place that I would enter. Often I don't have the time to sit there and wait for the stocks. And so therefore I may enter right there. But I'm going to go through this list and I'm going to show you what I often do. FACT, let's look at this. All right, I see the 200-period moving average, and where is the 20? Here it is. The 20 is right there, close by it. And see, this is a nice one to look into because we don't know what will happen. So once you get these two close together, the 20 and the 200, you know that they're going to go farther apart. But which way? Will it go down? Will it go up? We don't know yet. Now here, the RSI is right in the middle. So we know that it still has a chance to go up or even go down. That's fine. So, but I want the stocks that are going up. How do I know which ones will go up? Well, I've shared with you different ideas of the candlestick patterns. I hope you're able to see this clearly on your screen. All right, here is the a large green candle. So let's suppose that what did I do here? Let's suppose that right over here, you find like, next morning it opens and then, it's starting to trade and you find a large green candle, okay? That is a good indicator, all right? And then you can see what happens after that large green candle and then see if there's a good place to move in. Another one is the hammerhead, all right? So it's like a hammer. The hammer candle is another one that you want to look for. Another one is that if there's a red candle being engulfed by a green candle. That's a bullish engulfing pattern, it's called. Okay, so when you have a red that's being surpassed by a green, that's another good point of entry. Another one is when you have a nice large green candle and then a small red candle, and then the next candle surpasses that red. Okay, so these are some good possible entries that to look for. And when you see this, okay, when you see one of these, and when the pattern is close by here, like this, with the stock above the 20 and the 20 above the 200, and you see that the RSI is not too high and there's still place for movement up, okay? Now, sometimes I just want to let you know that I may enter right over here as well. All right, but what do you want to do? You know that it's never advisable to trade without a stop loss, okay? And in the last 2 or 3 months, what I've been doing is the extra effort that I'm placing in finding the few of the best trending stocks, I'm using that as my loss prevention. All right, now, Now, I think many traders might say that's ridiculous, and I am also thinking that may be a bit ridiculous. I don't know. Uh, but I'm, this is something that I've been making profits on, and I'm watching carefully. Now, here is something that I would do. All right, here is something that I would do. I would try to put a stop. If I'm going to put a stop, I would put it right below over here. Okay, so because this has been a point of support for some time. If I put a stop loss, it'll be right here, like 474. That will be my stop loss for FACT right there, and then I would try to go up. But what I've been doing is, I'm using, I am, yeah, uh, I'm claiming my extra efforts at selecting the best trending stocks as my stop loss. All right. And I'm entering the trade and setting a target for 1%. All right. So there's two ways to do it. If your broker allows you to, let's say this is my entry. Okay. Now, let's say, for example, that your broker allows you to enter an exit price. Some people call it a GTT, good till canceled, or a limit order to sell, or different terms are used in different platforms. Whatever it is, if they allow you to set that, maybe you can enter and set in 1%. That's what I've been doing. I put a limit sell order for 1%, and I just leave it there. Okay, and then so what would be 1%? Here is a way to do it. You can you can take a tool like this and go here and then calculate 1%. Here it is. Here's 1% right over here. Yeah. Okay. 1.03. Now that's good enough. All right, here's 1%. So once I click on this, see 482.05 right there. That would be my 1% above the purchase price. So at the time of purchase, I would set that as my target to sell. Or you would say some brokers that don't allow you to set it at the time of purchase, then what I would do is I would do this. I would mark this out, find what is that 1%, and then I would put a separate sell order, a limit order, and I would put in 482.05. Okay, I hope that makes sense. That's what I often do. All right. Now, here is another one. Indian hotels. All right, what would I do with this? All right, here it is. See, the 20 is below the 200, so I wouldn't even bother doing it. And of course, look at this. This is the 20 is far away from the 200 as well. So what does this mean? Well, sometimes what I do with this is I will enter from here and I would look for a 1% gain. Okay, because the RSI is still way down here. There's still place to move up. So I may enter at this point, or I may wait until the RSI is even further below, like right here. Okay, and then I enter. Because if I'm looking for a 1% gain, 1% margin right here, here it is. Look at that. Look. See, before it even gets to that 200, because we know that the 20 is going to come back up to the 200. Before it even gets there, that's 1%. Okay. Now, some of you might be thinking, and I know many have said that in the group, have in our discussions as well. But if you put the 1%, and what if it goes further, and you could have gained more, and you lost out just because you exited too early. That's true. That's true. But for me, I'm just taking the 1% and I'm getting out. Okay, because I don't have time to sit with this all day long and to sit there and watch, because sometimes it sells on the same day of purchase. Sometimes it sells on the next day or the day after. Okay. Now I've had now some people that are trading in the United States. They deal with something called the PDT rule if they're day trading, and so what you could do is, instead of day trading, you could do it as a regular trade, as a cash trade without doing any leverage, and you can do this. Now, for U.S. traders, what happens is when you sell, that the funds from your sale doesn't it's not available to you right away to trade. Okay, for us in India, that's a great benefit. We can trade it again if you sell even on the same day at the cash trades. Okay, not the intraday. You would select the long term, and you can sell on this again. Use the funds on the same day. But countries like the United States, they don't allow you to do that. Only on the third day will you be able to use the funds again. But that's fine. You exit that and then you wait until the third day. So if you, whatever funds you have in your account, if you have divide that into 3 or 4, at any given moment, you may have 1, 2, or 3 trades that are in process, and then one sells off, and then you just wait. And then hopefully by that time, the one that you sold off maybe 2 or 3 days ago, the funds will become available to you to trade again, and you can trade that same money one more time, although you would have to wait a few days, and that's fine. You can still make money like that. Okay, NHPC is another example we'll look at. All right, should we trade this? Now, this one I wouldn't trade because, it's the 20 is below the 200, and I'm not really expecting an upward movement here. Tata Consumer. Sorry, this is Tata Communication, not Consumer. If you notice, the 20 has gone further away from the 200, and we can expect it to come back. I won't trade this because, will it go up further? Well, I don't know. The chances are less because it's already too far away from the 200. And also the RSI is quite high. And so therefore, I don't have much expectation about this continuing to go up. Yeah, so the probability is less, so I wouldn't bother trading this. Tata Steel, all right, now look at this. The 20 is above the 200, and you see that bullish big candle right there. And this would be a place where I would enter right after this, okay? But now, what will happen the next day, we don't know, okay? Because the day ended. That day ended with a big upward moving candle as well. Okay, that's Tata Steel. All right, Ashok Leyland, all right? Here is a place where the 20 and the 200 are close by, and this is a place that I would want to enter. And look at this. The RSI is not too high. It's at a safe level right there. And if it's so high like this, it's not going to go any higher. Chances are less, so it's going to most probably come back down again. But if it's sideways, it can go down, but it can still go up again if the proper patterns are here as well. Okay, again, another example is Gale. Now let's look at where the 20 and the 200. Okay, the 20 and the 200 seems to be close, and look at that. At the end of the day, there was last 10 minutes, there was a nice upward movement. Look at that. Okay, that was on the previous day. And this is something that I may be interested being in entering, but the only problem is, look at this, the RSI continues to go up, so I would be a bit doubtful if I should enter there. But even if you do enter there, the worst thing that can happen is you might take 2 or 3 days for it to sell, and that will do fine. All right, here is one where I have entered, and this is something that I would, that I would look at carefully, because look at this, the 200 and the 20 is far away. And the best probability is that it's going to come back close to the 200, and the RSI is pretty low, and it may not go further down anymore. Okay, so we don't know yet, but the possibility is less, and the possibility is more that it could go up. Okay, RVNL is looking good. IOC, Indian Oil Corporation, again, see that? Look at that. The 20 is beginning to come back close to 200, is it? Well, we have to wait and see. All right. And the RSI also looks like the possibility is there that it can continue to go up. REC Limited, again, the 20 has gone too far above the 200, right? And I expect it to come back down again, because look at this. Yeah, even here, the RSI is a bit too far. Punjab National Bank, all right, again, the 200, the 20 has come close to 200, and we're looking for an upward movement here as as well. And the RSI seems to be fairly good, not too far down. All right, these are the stocks that I'm looking at, and these are the ways that I would trade this, looking for the right entry. And I've shown you the right position where you want it to be in, and the right indicator is the RSI. And then I've also shared with you 4 candlestick patterns that I often look for, something like a very strong bullish green candle. See, you have to notice that why is this bullish green candle important? It's important because this indicates that there are some institutional buyers getting in there, okay? So where they're trading millions of shares maybe, and so institutional buyers would be the ones getting in. If that is so, then there's more chance for an upward movement even further. Second one is the hammer candle pattern. That means that the lower prices are rejected, and then people close with the candle closed, moving toward that higher prices. And then the third one is there's a red bearish candle that's being surpassed by the green candle. All right, that's called a bullish engulfing candle. That would be another good possible entry. And then there's another one where there's a strong green candle, and then a small red candle shows up, but then red candle is overtaken by a larger green candle. So these are some good entry points that you can look for if you have the time to sit and look for it. And the benefit is if you can look for that and find that exact right one, it might sell off on the same day, sometimes within minutes, and you can enter again and again. That's the basic idea. Now, unfortunately, I'm not able to sit and watch and do that so much. And so therefore, what I do is if the location here is good and the RSI also looks good, I may just go ahead and enter and then look for a 1% profit as well. All right, this is a way, these are ways of finding entry points for purchasing the stocks. All right, so if you have questions, please leave it in the comments below. Hope you are enjoying these videos, and if you find them helpful, please make sure to press like on this video, and to subscribe to the channel, and then to share this video with others that might be helpful to you. All right, thank you, and you have a great day.